Welcome to the brand new weekly show, Fed Watching, where I give you the week's recap of what happened in financial markets and the economy in less than 15 minutes. Let's jump into the stock market daily recap. Monday's over. Markets are mixed. Nasdaq's down. Everything else is pretty much up. I think everyone's kind of holding their breath for the elections tomorrow. See what happens. It doesn't seem like anyone has any real strong opinions about what's actually going to happen after the elections. So maybe we'll get another something like 2016 where the elections happen and then everyone thinks one thing, and then when the market actually opens, we get the opposite. But we'll see. It's Tuesday, election day. Markets are up just a little bit, pretty much across the board, and it seems like everyone thinks that we're going to get a Democrat-controlled House and a Republican-controlled Senate, and they think that that's at least neutral, if not good. So I guess we will find out tomorrow what we actually think about it, or maybe we'll get a surprise. But all's quiet. It's Wednesday, and as was predicted, the Republicans kept the Senate, and according to what I'm reading, are expected to keep it through like at least 2022 or for a really long time. And market was either happy that the Democrats took some part of government back, that added a little check and balance, or we're very happy that they didn't get more. It's hard to say which, but market's way up 500 points on the Dow, 2%, pretty much across the board. Volatility's down, and Jeff Sessions has just announced that he is resigning, which has got to be good for weed stocks, right? He's straight out of the 80s war on drugs, so it'll be interesting to see if he gets replaced with a similar guy. But he's gone. It's Thursday. Big news of the day was the Fed did not raise rates. Markets were flat and just barely slightly down. But it seems like we got what everyone expected. No big surprises. Did snap the little 3-day winning streak we had going, though. Market ended down just a smidge, 200 points on the Dow. We're wearing a hat because Chess World Championships are going on, and American Fabiano Caruana is maybe going to get a draw in Game 1. So we're stoked about that. So, as you probably put together from the daily recap, the market had a pretty good week. S&P 500 up a little more than 2%, almost back up to 2,800. Dow was up 3%, almost back to 26,000. Small cap stocks, Russell just barely better than flat, so not much moving there. Nasdaq did not do as well as S&P 500. It was barely up 0.6%. International stocks basically flat. Emerging markets down 2%. Really the only thing that lagged. 10-year Treasury about 3.2%, basically unchanged for the week. But risk-free rate over 3%, so a lot higher than normal. As far as the sectors, everything seemed to do pretty well. Energy, tech, materials all lagged a little bit behind. Either had flat or just barely up weeks, but it seemed to be a pretty broad rally. It seemed, like I said, on one of the days, seemed like the market was just pretty happy with the elections in general. It wasn't specific to any one sector. On to the economy. Spoiler alert: it's doing well. We had a lot of news this week. ISM Services survey with a reading of over 60. That's high. Anything over 50 is positive. This month and last month are the highest two readings since the index began back in 1997. This lines up with everything anecdotal that you've heard. Restaurants having a hard time finding staff, prices going up. It's what you'd expect in a good economy. Job openings, there were 7 million of them. And for reference, there are 6.1 million Americans classified as unemployed. Workers are also quitting at high rates. That's another really good sign. They expect that they can get another job somewhere else. Consumer credit rose by $11 billion. Revolving credit, like credit cards, actually went down. So think about that. Like Americans are paying down their credit cards because they've got these new good jobs. And non-revolving credits like a car loan That doesn't include mortgages, but like car loans actually went up by about 5%. So people are probably feeling pretty good about the new higher earnings that they've got. Jobless claims came out. They're at the lowest level since the 70s. Not that much to say about that. It fits with the job openings number being really high. PPI, so that's the producer price index. That's inflation for producers. Uh, Came in way higher than forecast. Came in over 0.5% for the month instead of the forecast of 0.2. It's almost at 3% over the last 12 months. We're finally starting to see inflation hitting the numbers. Is something everyone's been waiting for. Wage inflation is the big one that people are hoping to see. I mean, that's when you'll really know that everything's clicking along in the economy. But good sign. Consumer sentiment has stayed near 100. We haven't seen that since pre 2008. It's a really high number. We'll see how volatile that is, but really we've been ticking along for the last 10 years and finally have reached a pretty good place. At least people feel good about it. Take all that into consideration, and the Fed announced they are not raising rates. The Fed funds target remains at 2 to 2.25. The Fed actually targets a band, and there's a top end of the band and a low end of the band, so it stayed 2 to 2.25. And what you can expect is if the economy keeps on ticking along for the rest of the year, we'll probably get one more rate increase in December. If it seems like things are faltering, if we don't actually get any inflation, probably not. It's worth pointing out that the Fed has said they think the long run Fed funds rate target is probably going to end up being around 3%. So it's not like there's a whole bunch of rate increases between here and there. If people are waiting for 1980s esque rates, they're probably barking up the wrong tree. They're probably looking for the wrong thing. But the Fed said basically we're seeing what everyone else is seeing. The Fed's going to do what the Fed's going to do. They don't care that Trump has said that he doesn't want rate increases. If they see inflation getting much over their target of 2%, what they've shown is they're going to increase rates. The stock market's probably not going to like it when they do, but at the same time, it seems like the market pretty much expects it at this point. Miscellaneous related news. Big surprise was Jeff Sessions resigned. So Attorney General is out. Reactions were kind of funny because a lot of people that wanted him to resign a year ago were very offended that he would be forced to resign now. And forced, of course, is in quotes, who knows? But a lot of Democrats that had been saying, "Oh, this is another sign that the administration is, corrupt," had said that, of course, he needs to resign, as soon as he was appointed. They didn't think he could serve without conflict of interest. The bigger relational markets is Sessions was just a crazy 80s type war on drugs guy who knew what he was going to do to all these states that were legalizing marijuana. I have no idea what his successor is going to be like, and it's pretty unclear right now if the current guy is going to be just interim or if he's going to end up running the show for a while. People have been talking about him not being congressionally approved and somehow that's unconstitutional. I don't know the details of that. I'm sure it'll all get sorted out pretty soon. But Sessions being out, definitely, if you're a marijuana stock person, a good sign. Same thing for all the companies that can't get bank accounts or they're worried about the FBI coming and raiding a facility. I mean, it seems like it's much less likely with Sessions gone. But of course, it depends what we get instead. So we'll see. And then other big news. So the World Chess Championship is going on. Fabiano Caruana, the American, versus Magnus Carlsen, the world champ, number 1, number 2 in the world. They played their first 2 games. They're both draws, so it's 1-1. They're going to play 10 more games. It's happening in London. They play 2 days on and then 1 day off. So maybe check it out. Root for the American. Thanks for tuning into this first Fed watching episode of Buck Talk. I hope you enjoyed it. We'll be coming to you every single week, and we'll have whatever the news is for the market that week. We'll have whatever the news is for the economy that week. We'll be looking at end of the quarter, some longer time periods than just a week at a time. But we'll definitely make sure that each week you know what you need to know going into the next one.